Hey friends, Lucian here with the Bullish Bears team. This video is going to be on bull flags and how to trade bull flag patterns. This pattern is hands down my favorite pattern to trade. It is one of the most common, it's one of the most easiest to learn. Again, when you're trading, no matter what your trading style is, these patterns, they're found everywhere, right? They're the foundation to absolutely everything, price action in the stock market, right? And it's important to realize that when you learn these patterns, you don't need to trade every pattern, right? Choose your couple favorite patterns to trade and stick with it, right? So when you're doing your trading plan, there's your trading style, what you trade, and then kind of find your plan behind it, right? So you want to find what your, favorite couple patterns are, stick with those patterns. And I say this because, I love bull flags, right? They're my best pattern to trade. They're the most successful trades that I make. And sometimes when I start to divert off to something else where I see, oh, I see this pattern, I see that pattern, I can see it, but it's not naturally what I gravitate to, right? So that's where, again, learn the patterns, but you don't have to trade every single one, right? And I'm going to show you when I get into bull flags why they're easier to trade. They're kind of very simplistic, and they're found, again, on any chart time frame. Again, most of these patterns are on any time frame. But what's nice about bull flags is you can have really low risk on them because your entry points are typically, depending on what type of flag it is, on smaller candlesticks. Now I'll show you a really perfect bull flag to start, and then I'll show you some maybe not so perfect ones. But it's important when you're trading this pattern, you don't just trade any pattern just because you see it. You have to also be aware of things like trend lines, horizontal, vertical support and resistance levels. So vertical support and resistance levels, and support levels, those are your trend lines, right? And then just because you see a bull flag or any pattern could be at resistance levels as well, right? So you got to put all that stuff together. So we'll just take a look at a chart here of CVX. What I'll do is I'll just kind of maximize the screen over here, give it a full screen, and you'll see right here, so with a bull flag, it could be one candlestick up, it could be several candlesticks up, but typically there's a move up, and then there's consolidation or pullbacks. So be aware, if you're new to trading, stocks just don't go up forever, no matter what the talking heads on TV or social media tell you. Stocks go up and they come down, just like the market. The market goes up and it comes down. It could be sharp pullbacks, sharp drops, or it could be gradual, right? But the bottom line is a stock or the market doesn't go up forever. So with a bull flag, you have a move up and then you have a pullback. It could be a sharp pullback. It could be a gradual pullback. But you'll see right here, kind of think about a visual, right? When you hear of a bull flag, think of a flagpole, right? So you have a pole that goes up, and then you have a flag that kind of goes down, right? So the flag can come down, it can kind of trade sideways, it doesn't have to be perfect. The flagpole doesn't have to be straight up, right? Most of the times it's kind of angular or going up kind of to the side, right? So you'll see right here, and you can kind of call this trend lines right here. So you can kind of just take your tool, trend line tool, and connect those peaks and valleys, right? So you'll see kind of right up like this or like this. You'll see kind of the move up. So that's kind of like your flag pole, right? Flag pole to the side. And then you have those consolidation candlesticks back. So you have a move up, consolidation back down, many a times to support levels, right? So, typically again, so it kind of moves up, consolidates back, and your entry, again, it's not always perfect, but with a bull flag, the entry is the breakout over the top of the flag or at the consolidation point. So when price breaks that angular trend line or this last candlestick, you would enter as price breaks out of the flag, and then you would use a candlestick close below that flag as your stop. Again, You can adjust your stops based upon your risk management, whatever your trading style is, but that's kind of your typical way to trade a bull flag. You enter as price breaks out of the flag, use a candlestick close below as your stop. But as you can see, a candlestick close like this, or see these candles right here, they're smaller candlesticks. So when you get a nice little bull flag like this, you're risking, or a candlestick close below something like this compared to over here, it's a smaller risk, right? Smaller candlestick. So if you use candlestick close below there, it's a smaller stop, right? So, or it's less risk. So I really like those small risk candles. I like trading those momentum breakouts. Again, this is a daily chart. This pattern, which I'll show you, is found in all different time frames. But this is a perfect looking, really nice looking bull flag. So now I'll clear my drawing sets and we'll take a look at some maybe not so perfect ones. You'll see kind of over here, we'll go back to this example right over here. So you'll see kind of there's this move up right over here. All right, so connect those peaks and valleys. And then you have kind of this pullback right down over in here. Kind of a flag, right? Kind of a move up, consolidation back down. And then you could trade a breakout right over in here. As price breaks out above this candlestick right here, you take an entry and you use a close below this candlestick as your stop. So that would be a breakout over here, right? Again, when do you exit a trade? It all depends what you're trading. Are you day trading? Are you trading a straight up call? Or are you doing spreads? You sell near resistance. So how long are you in that trade? Again, that's all the stuff we teach you in our courses and in our trade rooms. But typically, again, when you trade these breakouts, you look to take profit at those resistance levels, and then you always look back. You can always get back in for entries. So for me personally, if I trade this and I see this and I see this breakout, the moment I see kind of a reversal or like a spinning top or a doji or something, I typically get out and then I watch for a pullback again for re-entry. All right, so that's a couple there. Let me just see if there's any others that I like to see over here. Yep, so here's, again, not always perfect, but you'll see kind of like you have the move up, and then you'll see kind of this consolidation back down right here. So here's a bigger overall kind of bull flag. And you'll see kind of price trade, you'll get these little consolidation candlesticks. So sometimes it'll go, you might have looked to get in as it broke out over here, right over in here, and sometimes it trades sideways. It doesn't always break out. Sometimes it kind of trades sideways and doesn't do much right over in here. So again, not everything is perfect, but you'll see kind of a move up, kind of move right down over in here, and it kind of moved out, and you'll see now why is it kind of trading sideways over here? Well, look left. There's a gap, right? So be aware of that, there's that term, all gaps must be filled. It's typically, it typically happens, but it's a matter of when. It doesn't always happen when you want it to happen, right? So you'll see this one kind of just gradually went like this until it kind of filled the gap over in here, and then it's kind of just traded sideways. But that's kind of another kind of a flag, or bigger overall flags. So you look for those smaller patterns and then you look for them in the bigger overall patterns. So now I'll just expand over here, and just for day trading, let's just look at something that might be moving up this morning over here, and let's go to a shorter time frame. Actually, you can see some flags all right in here. So before I even go to like a daily chart, you'll see now, just to show you this, kind of like a sideways trading flag, right? So you use these gaps up or down as part of the pole, right? So this is part of the flag pole. And then you'll have these diagonal flags that go up in the wind like this, right? Those are part of like those kind of those almost like those rising wedge-ish patterns. So these get a little bit tricky to trade when they go like this. Again, that's not my favorite way to trade it. I like it when it like really pulls back, but you'll have a flag again up in the wind, so the flag kind of trades out in the wind. I like when it kind of pulls back, but so that's one kind of trading out in the wind. But then you see it kind of goes up, and then it kind of pulls back down right over in here. So you might call that a flag. You could call it maybe an ascending triangle with a flat top. But again, kind of just think about this flagpole kind of up like this, kind of almost like a flag. And then you would get in at the breakout of this apex point or the top of this area here, candlestick close below here as a stop, and then you'll see this one had a nice move up. But again, when you learn trend lines and stuff, then you start to see consolidation points and when prices hitting resistance levels and when you'd want to potentially get out of the trade. So that's why it's not guesswork when you see these patterns. And when price starts to consolidate, you see those spinning tops or those doji candles near resistance levels. That's when you look to take your profit. So let's go into, let's look at like a 1 minute chart, see if there's anything good on this one. So these are not a fan, like these kind of these algo candles like that trade sideways. Those are really weird looking, like this stuff. I'm not a fan of that stuff. I like the real kind of solid candlesticks. So let me see if I can find one right now that's running on momentum this morning. So what I'm going to do is go, I'll see here. That's actually my nightly scan. Let me go to my high a day scanner here. All these scanners, or not all of them, but the ones that are highlighted, we have in our next level library. So we put these in our next level libraries. If you want access to our scanner settings, you can go back there and get access to them. All right, so let's look at some examples here. I'd like to show stuff that's not always perfect looking. So you'll see GIVO up over in here. You'll see move up, right? So you see these bullish candlesticks up, and then you have this kind of consolidation back, right? So if you were to get in on something like this, you would get in an entry of this flag right over in here, or right over in this candlestick. So as a breakout happens out of this flag, candlestick close below as your stop. And then you can, again, when do you want to take profits? Are you day trading? Like, so if you're just trading shares of this stock, well, you know, you could ride this out for a while. You could do trend lines like out, see when something breaks a trend line. All depends on what you want to make for profit, right? Some people are happy making 10 cents a trade day trading. Some are happy with 20 cents, 30 cents. But again, if you're trading shares of shares, right, you get in on the breakout, candlestick close below, and then you determine at these levels when you want to take your profit. But here again, move up, consolidation back, that is a flag. Then you have, again, things like, you'll see moves up like this, and that's where it's like you don't always trade everything that's a flag, right? So move up, consolidation back, you know. You can get in here. Again, the earlier your entry, the better the flag. Other times that's where you'll see just in kind of move up, price moves up, consolidates back down, might look again like a flag, right? So these flags, but they're not always going to be the best to trade because you got to look left. What's the support resistance levels? What time of day is it happening? If you're trading those momentum flag breakouts, day trading them in the morning, the earlier you get your entry, the better. So you can see kind of right down here. Here was a really, not perfect looking one, but kind of really nice move, little move up. Here's where it was really nice, right? Right back down here, trade in the breakout of this flag right here, candlestick close below here, right? So quick move up, little consolidation back, breakout here, close below here, and then you can ride it longer, right? So why does this happen? Again, it's not always like a typical rule, but it's those first and second pullbacks of those flags, and then it gets wonkier, a little bit crazier after that, because again, remember these momentum stocks and stuff, they hit scanners. The more, you know, action, the more volume, the more that's going on in the stock, the more traders' eyes that see it. You get all the volume coming in, bigger candlesticks. So again, that's why after that first and second pullback, many times you'll see this. So when you're day trading, you got to be careful. The earlier your entries, or watch for the pullbacks, let the setup happen, come back after the setup's happened. You have those high a day, low a days. You map out support resistance levels, and then you look for re-entries. But for momentum, bull flags are probably one of the most important or most popular patterns to trade, right? So you look for those stocks that are hitting high a day, watch for the move up, the consolidation back, get the breakout, trade the breakout, and then you decide when you're taking your profits. If you're in back over here, you have the ability to stay in a lot longer than, like I said, out over here. But the thing to be careful of is those low floaters. So if you have a very low float stock, that's where things get really crazy and really volatile. You'll see right here I have trade ideas pulled up, and just to show you here, float. So anything under 20 million is low float. Under 10 million is really low float. That's where you hear the terms pump and dump, those like really quick moves, right? You got to be very careful of those. However, that's a very popular trading style and strategy. We teach that in our trade rooms, our penny stocks room. I say that it's just you'll see a lot quicker moves up and quicker pullbacks. So you have to watch, wait for those pullbacks. So let's just see if we can pull up a couple here and see if there's anything kind of volatile on this over here to show some examples. All right, so here's an example of a kind of a crazier one right over in here. So you'll see right up here, quick move up, and then you have the pullback, right? So you can call that, flag over in here. Bigger candles, a little bit crazier right here. So if you got in the break of this right here, that 314, 315, you'll see how quick, right? These moves are. So kind of up and down like this. So just because I want to show you this because, you also got to look at things like look left, map out pre-market support, high resistance, high and lows over in here. But you'll see, when market starts to open and then you have those pre-market highs and lows, what happens in the past, remember, affects the future. So I want to show you kind of something, this kind of move up, consolidation back down. You have this move up, and then here's another one kind of right down in here. So this is where I'm saying, just because you see it doesn't mean you trade it. So just because you see a bull flag doesn't mean it's something you trade. Got to look left, got to look at those support resistance levels and see what is happening. All right, now let's take a look at one that is really running, right? So you'll see Veru over here, and you'll see this one's starting to rip and going up, right? So you'll see what happened back over here, right? Pre-market high. What did price do over here? It broke out. So it broke pre-market high. So you start to kind of zoom in over in here, and you'll see kind of these flags right over here. They're forming right below pre-market high. That's really nice to keep an eye on. So you'll see kind of a move up, and then you'll see kind of this consolidation back down right here, right? So you have this flag. Just because it looks like it might be going to break out doesn't mean it will, right? So this is where the bull flag, when you see it in a bigger overall pattern, you can get in the potential of it breaking a resistance level, or you can wait for it to go and break out and then watch for the retest to get in. Many a times you won't get that retest. But you'll see this is one of those diagonal flags kind of in the wind a little bit, and then you had that little bit of a pullback right over in here. So if you traded this flag right here, you would get in at the breakout right over this over in here. This candlestick closed below over in here. If you got in kind of right over in here on that little pullback, you would get in on this breakout candlestick close below down over in here. Now you can see smaller flags and then bigger kind of flag overall. Remember, this one's kind of trading sideways a little bit, but just kind of show you not every flag is perfect, but you'll see bigger candlesticks, still a flag, but you'll see it's not as small of these candlesticks, kind of one flag, two flags. That third one, then it gets crazier, right? So over in here, you would have got in at the breakout of this candlestick. Candlestick closed below as your stop. Again, you take profits whenever you feel is best for you. But on something like this, if you were day trading it and you got in at 7.11, and then you see this reversal or kind of up here, 7.40, remember those whole $0.50 amounts, really important support and resistance levels. You know, a 30, 40-cent move, not bad for day trading, right? So you'd consider taking your profits, waiting for a pullback, right? And you see kind of a move up over in here, and then you can see down over in here, another flag. Right down here, you could trade a breakout over in here, this flag, candlestick closed below here as your stop. Consider taking your profits at resistance levels, right? But you can see these flags are everywhere. But this is my favorite pattern to trade by far. I always look for those pullbacks, and you'll see those flags. Many a times you'll see the flag is usually, or many times, the handle inside of a cup and handle, right? So you'll see like kind of a cup right here, and then the handle, right? Cup, that handle becomes the flag. So that's why it's important to learn these patterns and then look at the bigger patterns overall. So again, this stuff is the stuff we teach you in our courses and in our trade rooms, but I wanted to show you kind of a few different ways here. You'll find these flags on all different time frames. Watch for those pullbacks. Look for those small candlesticks to have smaller risk. Look left, look at those support and resistance levels. And then just because you see something that's a pattern doesn't mean you go and trade it. Look at where it is compared to support and resistance. But again, I like with these flags when they go up and they kind of have a small pullback, test support, and then the earlier you get in on those flags, the more, or the ability that you have to stay in the trade longer. And again, learn things like trend lines, because then you can start to see, well, hey, how long can I stay in this trade for? Well, you can kind of just adjust your trend lines, right? So you connect these support levels, and so you can kind of see out here, if you were back in over here or over in here, you'll see the trend lines change, right? So price went up here, and then it came down and broke the trend line. So do you get out at the tops near resistance? Do you wait for a break of a trend line? Or if you have an earlier entry, do you stay in longer? That's all up to you, how much you're looking to make on every single trade. Kind of break it down to what are you looking to make per day when trading, break it down to how you're trading it, how many trades you're looking to make. So that's why it's not a hard and fast rule. It's just, what are you trading, how are you trading it, and are you doing shares, options, all that